Hey, everybody, it's Mark Yegge. Welcome back to another weekly stock market update. Thank you for being here. Market's starting to look a little bit good. Like, we also have some sky high, well, relatively sky high treasury yields, but I think the market's kind of shrugging off that change and is relaxing a bit. And now that's why you're seeing the market start to jump up. I don't know. We'll see. We'll see. Anyway, it's all very interesting. Market is still red, but it's really trying to go yellow. I think it may go yellow by Monday or Tuesday, but red and yellow still mean, have a little caution, be careful. Let's take a look at a couple of the things out there in the market, a couple of the indicators. Let's start with the NASDAQ. Well, this is the QQQ, so this is the weekly. You can see that we're in a little consolidation pattern here on the weekly. And then putting it on a daily, you could probably see that that daily is under the 50-day moving average, that red moving average, but it's trying to go back up above. So it's made it above its last couple of moving averages. The 10 and the 21 is what I have on this screen. And so it's trying to go back up to the 50, which is going to be constructive. It's also trying to fill a gap from about 2 weeks ago. You can see that little red gap there. So the QQQ, which is the NASDAQ, is kind of, I'll show you the real NASDAQ here, but it's the same thing. It doesn't look any different. All right. So it doesn't look too bad. The other ones, though, are not looking too good. The S&P went a little lower, tried to test the 200-day moving average, didn't quite get there, and is making a bullish engulfing candle pattern here today, which is engulfing like almost the whole week of trading in the last 5 days. That's a positive sign that things are maybe turning around. That's a good hammer candle if we get some volume by the end of the day. I doubt we will. We'll see. All right, so that's the S&P. Let's go down and take a look at the Dow Jones. This one's not good. This one's not good. This is below the 50, and it's below the 50. It did have a nice hammer candle, and that's really constructive, but it needs to get above that 200-day moving average, and it needs to get above the 50. There's a lot of work that the Dow needs to do, and it's going to take it some time to repair the damage. Same thing with the New York Stock Exchange Composite, and a lot of the damage right now is coming because of oil. So the oil has been a little bit weak here coming into this week, and so it's showing on the chart, and a lot of the other things are weakening as well. So we're not out of the woods yet. I know it might feel today that everything's green and Apple's going up and things are yummy, but it doesn't always work out that way. Let me show you a couple more. Speaking of Apple. All right, so looking at Apple, that's got some constructive. That's like 6 out of 7 days are up, and higher highs and higher lows. That's the trend you want to see in place. And it's making its way toward that 180 level, which has got that 50-day moving average. It's also making its way at this level, which is the earnings day. And that high of that is 187. That's the high of the low of the gap there. And so that's 187. I suspect it wants to get into that gap and fill that gap and run up to 200 and maybe even further, probably going into Christmas, where people like to buy Apple products. A lot of people trade this Tesla thing, including me. So let's look at this Tesla thing. Tesla is making a cup and handle pattern. So you can see that the cup goes from 299, makes a nice little cup if you're looking at it from the side, to 278. There's a little cup there. And then it makes a little handle. And that handle is kind of this area where it comes down from 278. And it makes this little spot. Let me see if I can draw it there or point it to you. I'll draw it. And so that's the handle right there. I can't draw it. I got to point it. All right, so that's where that is. Now, it's above the 200-day moving average. It's above the 50-day moving average. It wants to go to that 279 area and push through that. And if we get a strong market, we get everything kind of working in the right direction, it wants to go to 299.29 and break through that swing point. And if it does that, I suspect that 320 is its next target, somewhere in there. So keeping an eye on that. That's interesting. I'll show you one more thing. Let's go back to the VIX. I think it's 0 VIX on this screen. Yep, there it is. Now the volatility index is telling us that the market is freaked out a little bit. So you can see from that 1268 at the bottom swing point that it's pushed up almost to $22 or 22. And that is that's a significant move. It's almost doubled from its 1268 swing point low. And so that's saying that there's a little bit of panic in the market. And so that has really come in. Now, today it's down, but it's still above the 200-day moving average. You want to watch the volatility, because when there's a lot of volatility, there's a lot of freakishness and people are scared of putting money in the market. I suspect we're getting a lot of money coming out of the stock market and going in to the bond market. Why you would invest in a bond right now, I don't know. I think it's crazy because I think the government is just irresponsible with our dollar. And so I wouldn't trust them as far as I can throw them right now. And so I don't care how much yield they're paying me. I'm not putting my money back in there. I want a return of my money, not just a return on my money. So, but anyway, we'll see how that shakes out. Listen, that's going to be it for this week's weekly market update. Thank you for joining me. Hope you have a fantastic weekend, and I'll see you next time. Take care.